Well, welcome back to Finance Uncut. On today's episode, we look at the best ways to invest in gold and silver and an update on one of my favourite trades. Following on from my previous video about the gold and silver demand skyrocketing, we wanted to explore what's the best way to invest in gold and silver. Now, there's many different ways, and we're going to discuss those now. And in this video, I'm also going to share how I am personally exposed to the gold and silver market. So you can buy physical bullion in the form of coins and bars, and personally, I think everybody should have a bit of physical gold and silver. In a world of digitization, everything going digital, if this global reset that the World Economic Forum demanding happens, we have central bank digital currencies, which I think all of that is highly likely, then having physical gold and silver is the ultimate analog investment class. If you understand exactly what central bank digital currencies can do around the control and privacy and all that kind of issue, having some gold and silver in the physical sense, for me, is the ultimate analog investment, and I think everybody should have some. How much of your portfolio, that's entirely up to you. So there's that. There's obviously pool and unallocated silver. There's programs around with different mints and large dealers that offer those type of products. And I'm going to do a video shortly about the whole unallocated, and basically ask the question, is the silver market a scam? But stay tuned for my next video on that. You've got ETFs, and the big ones are the SLV and the PSLV. Obviously, I only recommend the PSLV. Well, I don't recommend anything. We don't recommend anything on this channel. However, the PSLV is really backed by actual silver. So if you want to do the whole ETF movement, we'll put it this way. If I had the... no, I don't have both. I don't have ETFs at all. But if I were to invest in ETFs, the Sprott PSLV would be the only one that I would invest in. Look, you can trade futures contracts, and I think all of you that are tuned in listening to this understand the manipulation that's been happening using these paper future contracts on silver. So, yep, there's that. There's miners and explorers. You can invest in gold and silver miners and gold and silver explorers, and get leverage on the price of gold and silver. And then you can also do derivatives on miners as well, which I'll come to in a second. To get an understanding of my investment thesis background, how I think about the whole macro environment and how to position a portfolio, I did a 3-part video series called My Investment Thesis. Now, at the back end of part 2, I shared my 2020 scorecard, my investment portfolio scorecard, with all the different stocks, and also my put options. But if it's quite a long 3-part series, so if you just wanted to watch one, I'd probably recommend part 3. Part 3, I talk about where we're at, where I'm seeing the opportunities, and how I'm positioning my portfolio. So this is my investment thesis part 3 video. It's just got the second half of my stock scorecard up there, and then I'm just talking in the bottom right hand corner. Now, 2020 was my best year in terms of returns in my investment career. returned 288%, my average return, and that doesn't include the put options that we did on different stocks back in March, where we made 780% return in about 2.5 weeks. So, yeah, look, I've definitely got a good track record here. So if you want to have a listen to my thoughts, my macro thoughts, check out the part 3 at least, or you might want to check out the back end of part 2 to get my full scorecard. And this is just my stock portfolio. This isn't taking into account my real estate portfolio or anything else, or my trading. This is just my stock portfolio. Yeah. So I definitely put a link in the description below so that you can view this in your own time. Now, I also did this video, how you can print money just like Buffett, where I talked about 2 of my favorite trades, selling naked puts and writing covered calls. And I did a lot of that in my portfolio, which, as you just saw, returned 288%. However, I've just recently found out that someone else that I admire, look up to, does the exact same. And that's Mr. Doug Casey. Check this out.
Let's see. Someone says, I heard through the grapevine that Doug has historically enjoyed trading options, specifically selling puts. If this is the case, it'd be nice to hear more or less his strategy in doing so. And is it exclusive to mining companies, or is your scope broadened beyond that?
Well, look, options can be dynamite, and there are a lot of one of the reasons why I'm so bearish on the overall markets is because there are millions of average guys who've never done anything with options, who just discovered they exist, still have a hard time figuring out how a put's different from a call, and they're spending a lot of money for expensive trading services to tell them to buy and sell these things on. It's all crazy. So actually, yes, I've been active in the options market for many, many years. And here's the way I see it. You should never buy options because they're a wasting asset. You hold them long enough, they are guaranteed to go to zero, everything else being equal. So generally, I prefer to act as the casino as opposed to the gambler, and sell them as opposed to buy them. And that way, time is on my side. So when I sell options, whether it's puts or calls, but generally, I prefer selling puts for a number of reasons. I sell the nearby, slightly out of the money ones, and hope they go to zero. I don't buy these things because, you know, look, when you're buying options, you have to be right in order to win, but not just right. You have to be very right, because it's not only got to go up, but it's got to go up enough to
Make it count. Yeah.
overcome the premium.
Yep.
So I hope the questioner is not paying a lot of money for guesswork on the part of somebody peddling an expensive newsletter.
Let's hope not. And you mentioned there's a lot of people that are participating in options that never did before. And we have talked about this on this show before, but it's worth mentioning. My girlfriend, who had no stock experience, nothing, never. Well, she went through and she was setting up a Robinhood account in the car in the passenger seat beside me. And it asks her specifically, you know, how many years experience trading bonds, trading stocks, trading options, and all of them. She's like, none, zero with all of it. And once her account is set up, the next page said, you should add options, or would you like to add options? Would you like to leverage yourself up essentially for the options? But they put it in a very good marketing way. So it seemed like, yeah, this is the smart thing to do. They even had like confetti, animated confetti falling once your account was created and saying, now you should do options. This is the next obvious step. And so these services the brokerages before would never even allow you to trade options unless you had some experience and they had reviewed your account and all that. But now it's an upsell when it's almost automated. So that's a little scary.
Well, and here's the interesting thing about this, kind of a tip-off. I'm sure they weren't inviting her to write options or sell options. it would only be buying. So it's the smart money, the big money that's on the other side of that transaction. I mean, the little people just buy them. They don't have the capital to sell them. It takes capital to start with, to sell them.
Now, I also did this video, Wall Street Secrets, Banks Don't Want You to Know, and I shared 2 secrets. And secret number 1 is a Wall Street buddy of mine, an ex Wall Street buddy of mine, very successful trader on Wall Street, basically shared the best strategy that the Wall Street banks do that they never tell anybody else. In fact, what they do is they promote the other side of the trade so that all the plebs, do the other side and lose money while they are playing the other side of the trade. So I'll put a link in the description to this as well. It's that secret number 1. Secret number 2 is more about using your home loan to pay it off while also building wealth. But secret number 1 goes into what I was talking about with naked puts and covered calls and stuff like that. Now, I just want to share a quick video from Jaime Carrasco, who's a portfolio manager, on how he puts together his portfolio, especially with regards to his gold and silver positions.
That's a great way to put it, Jaime. And I'd like to go back a little bit to that article that you were talking about, Bitcoin displacing gold as an inflation hedge. Obviously, we've seen gold not perform nearly as well, let's say, over the past year as Bitcoin has. But taking into account, a longer term timeline, I think is important. How do you view that as gold, let's say, as an inflation hedge, and really taking into account the timeline over which you look at it?
Okay. I started buying back into my gold positions back in 2015. So, I'm in at very low prices, but along the way, I always said, when it comes to gold, buy right, sit tight, because patience will be key, to wait it out and let everything unravel. So when it comes to gold, I think, and the precious metals, I think that the mantra has always been that the longer it takes, the bigger the fiscal mess, the higher the price will have to go. And that's why patience is key in order to build your positions. What's been great, though, is the fact that the prices are being manipulated. I know that. My clients know that. I've explained it along the way, and they're happily sitting on these positions because thanks to blockchain, we've seen the appreciation already start to occur. So it's nice to be in the hindsight of time. It's great because, what I see is people jumped in. So look at what's happening with the precious metals right now. We had that run up last summer when we went from 1,500 up to 1,900. Everybody jumped in at that point, and now they've all come out. Well, I jumped in at 1,500 or 1,100 back in 2015, and I've been building my positions. So right now I'm in a position of strength. So what's been great is as these markets have pulled back, I've been able to add more and more companies that I really like within the portfolio. By the way, in that portfolio, I have all of the producers. The explorers, which to me are a different animal because those are about speculation and real estate, those I have outside of the portfolio, right? And that's a different game that I'm playing where I'm trying to capture warrants. I'm trying to capture as much exposure for clients, but also be able to sell if I have warrants to move out. But back to your question, I think it's important to understand that if central banks aren't selling, they're buying, there's a reason for it. And when you start to understand history and the history of money and electronic currency, then you start to disassociate the components of how to structure a portfolio. Because if you really look at it, the consequences of all of this money printing are hitting us, even though they're lying about the numbers. Anybody that thinks that inflation's at 1.2%, well, I'm telling you, you're in big trouble with your money because you don't understand that everything else is going up in price. The devaluation of the purchasing power of money is happening around the world, of currency, is happening globally, especially look at Canada. We have no gold. 40% of debt is being purchased by the central bank in Canada. That can't continue. People have less than $200 in savings. Now we have the whole COVID mess, which is slowing down the economy even more. But even before that, what are the consequences always? Greater inequality of social inequality, the destruction of the middle class, the loss of savings, and those that do have savings, they don't realize that the purchasing power of those savings are going down very, very fast. So as a result, I think the best way to do it is to have that patience and the fortitude to understand what you're doing and continue to build positions, which is what I've been doing for clients. And again, buy right, sit tight, and wait. Patiently wait, and you will be rewarded.
So how am I investing and positioning my portfolio for exposure in gold and silver? Well, if you check out my investment thesis video, you'll see my outlook where I think things are heading and how to position a portfolio for that. And obviously very heavily invested in the commodities section. So gold and silver, I've probably got about 20% of my portfolio in physical gold and silver, and that's stored in different vaults. I'm also heavily invested in the gold and silver miners and exploration sector. So once again, I did a video on this. I'll put a link in the description below on how to invest in that sector, how to find these miners and explorers, how to I guess value and what to look out for. And so I just shared some of my tips and things that I look out for, and some of my really, really great returns in the last 12 months have been in this sector. Now, the other thing I do is I've got some gold miners that I think, and actually other commodity positions as well, that I think highly undervalued, trading on very low multiples, paying dividends, but also I write out of the money covered calls for extra premium. So I'm pretty much making an extra 2% a month just holding these positions that I wanted to hold anyway. And so I'm making an extra 2% a month. Over the year, we're looking at average 24% per annum in income. And what do I do with that? I simply reinvest that, buy more stock, and I use that as a compounding factor. Now, a lot of these companies that I'm holding are paying around that 4 or 5% dividend, fully franked dividend. My Australian viewers will understand what that means. So, it's already been taxed at the company tax rate, and so depending where my tax rate lands at the end of the day, whether I either don't pay any tax on those dividends, whether I actually have to pay some tax, or I might even get a franking credit and get get a check in the mail from the tax office. So for my American friends, it's a little bit complex there, but it's a wonderful thing. So I generate really, really good returns on these selling out of the money covered calls. Now, I sell out of the money because I want to hold these stocks. I don't want to get exercised. If I do, it's not the end of the world. I make a nice capital gain as well as get the premium, and I might jump back into the same stock the next month or sell a naked put and buy in at a discount. So there's lots of ways that I play this, but ultimately I like selling out of the money covered calls because I want to sit in these stocks and these positions for a while. So once again, I just implore you. I'm not advising or recommending any way to invest. All I'm saying is go and do some study on naked puts and covered calls. If you own a stock and you could be writing covered calls on it, you're missing out. You're missing out on potential profits there. So that's something that I highly recommend. Obviously, also part of my portfolio, I'm sitting on quite a lot of US dollars at the moment. If there is another liquidity issue and we do have markets seizing up, which, when you look around at our markets, they are all insane right now. There could be a run on the US dollar. I could see that playing out. And the US dollar could end up going into a bubble, a little bit like Brent Johnson's dollar milkshake theory, kind of like that. Jim Rogers also is holding a lot of US dollars. He thinks that could happen as well, and there could be a run on the US dollar or a demand for US dollars and create a bit of a bubble in in the US dollar. And then Jim Rogers said he's going to dump it because he doesn't like holding US dollars. It's not that he thinks it's a great thing to own, quite the opposite, but there could be a run. So I do have some US dollars as well. I do have biotech. I've been investing in the biotech sector for the last decade. Once again, had some tremendous success there, and continue to have some success in that sector, and very bullish. Although COVID has put a bit of a dampener on some of my holdings because hospitals have basically shut down. Every other kind of treatment has been put on the back burner for COVID around the world. So anyway, we'll see how that plays out. But long term, very bullish on some of my holdings in that biotech sector. And actually, I've been reducing my real estate holdings. So I've actually been spending the last few months actually selling into this rising market. So I think it's an insane market that's going on. And while people are buying real estate right now, I'm happy to sell. I'm very happy to sell at these prices and the gains that I've made. And so either I'm right or wrong, but for me, I'm happy to play that trade, take those profits, and invest into undervalued assets like commodities, like silver, like gold, etc. So, so that's how I'm invested. That's where my portfolio sits. I love the physical gold and silver. I love the gold and silver miners and explorers. I just get that extra. And I've shared in other videos, I think in this video, the gold, silver miners and explorers charts that prove the leverage, the extra gain that you get if you get the right gold and silver miners and explorers that outperform the underlying metal. So anyway, guys, what do you think? If you like the video, please hit that like button. Apparently it helps the algorithms, I'm told, so really appreciate that. If you haven't subscribed, hit that subscribe button, hit the notification bell so you get all my videos. But yeah, love to see your thoughts in the comments below. How are you invested in gold and silver? What's your portfolio look like? Once again, I don't invest 100% into anything. I'm not a maximalist. I definitely have some diversification and play that. But anyway, love to see your thoughts in the comments below. Take care, everyone, and I'll see you again on another episode of Finance Uncut.